All right. So first, I know it's been a long day for everybody, so we appreciate you sticking with us. I know we've been a bit delayed as Tim was sharing words of wisdom on the main stage, but really wanted to get this panel of experts together to give you an idea of how we started our crypto funds, to give yourself a background on my experience. Run Block Trade Investments, the only SEC and FINRA compliant fund in the world currently. Started that 2 years ago and is still the only one today. But let's kind of dive right in with the experts here. And the first question we want to ask is, what are the key pieces of infrastructure that you need in place to develop a successful crypto fund? Or in your experience, what steps have you taken?
Hey guys, this is George from HGR Advisors, by the way, and I think that's a great question, right? I think you hear a lot of people say there's like hundreds and hundreds of crypto funds out there, and the reality is most of them aren't set up the right way, and there's just kind of these mom's basement kind of fly-by-night exchanges, funds rather. And so I think at a high level, I'd probably defer to like my CFO for most of the granular details, but I think you want to set up your fund entities sort of in a regulation compliant way and in a tax efficient way. uh, things that go into that could be kind of geographic domicile, any licenses you need, any exemptions you need from the governing bodies if you're here in the U.S. Uh, Beyond that, I would say like you have like a whole host of advisors you have to think about as well, from kind of legal counsel, which is very important. You shouldn't kind of cheap out on legal counsel. They're expensive, but you got to pay for them. To your fund auditors, to like the fund administrator, to even like OTC providers, over-the-counter providers, exchange accounts, and stuff like that. So if people have anything to add, maybe I'll just leave it at that. It's kind of the advisors, the entity structure, um, and also the other thing we think about at HGR is just security and custody of assets. Like how do we set that up in the back end? So yeah, I would spend a lot of time thinking about that.
Now, I guess for the rest of us, we all operate potentially in different jurisdictions. Can you shed some light on the jurisdiction that you operate in, and if there's been anything unique from that standpoint? Because I think for a lot of people, starting crypto funds, it's not a one size fits all solution. It's not the same way in the United States as it would be if you set up one in Estonia. So, kind of shed some light for the audience on that aspect.
Yeah, so our fund is set up as a hedge fund. So it's a traditional kind of master feeder structure where, because we're taking a lot of foreign money, most of our LPs are foreign based, and so we invest out of a Cayman master fund, right? But we have these feeder vehicles that are optimized for largely tax domiciling, depending on where the LPs come in. And so, like, yes, a lot of the principals are here in the U.S., and so we also have kind of a management company in Delaware. We have to be filing with, the right regulatory bodies here. And because we're a smaller fund, I think if you're under like 150 AUM or you can file for certain exemptions. So because the cost of compliance is very very expensive, right?
Yes.
So for a smaller fund, there's a lot of different ways you can navigate around that, get exceptions. You can kind of cap your investors. Like for us, for instance, we might have a cap of like 100 U.S. investors, and anything beyond that, we would have to, we can't operate under exemption anymore. So there are trade-offs, I would say, and a lot of it's like more nuanced, and you could go into kind of the details, but you'd spend hours and hours talking about that, right?
I would like to kind of expand on that a little bit more on how you targeted your initial investors. And with us being some of the first private equity funds or hedge funds, whatever you'd like to call yourselves from an establishment standpoint, what was the difficulty you ran into with initiating those first talks and completing those first investments with new investors?
Yeah, so at HGR, our LP base is somewhat diversified in that, yes, you have kind of a lot of us, as I mentioned, have angles in Asia, and so a lot where we do a lot of like high net worth or family offices in Asia. A lot of us come from traditional finance backgrounds, so it's a lot of PE hedge fund guys as well, and then just kind of like networks from our school, like yeah, rich friends from USC and Stanford, for the most part. But education is key, right? As I think everyone here mentions, it's a lot of it's you got to go to these guys, give them the crypto 101, tell them kind of like what the strengths of distributed ledger technology are, why the ability to program incentives is game changing, and what the addressable market is, right? A lot of it's level setting the size, kind of it's a very small market with plenty of room to run. A lot of it's saying, hey, if you have like something that could potentially 50x, you have to be kind of 98% conviction that that's not going to happen for you to not put money in, right? So a lot of it's telling them just how to size, because I think a lot of people look at the space and they're almost like think of it as a false dilemma where they treat the option as a binary option where do I put money or do I not put money in? And it's really it's a matter of sizing, right? The reconciler is sizing, because like do you put $1 into the space? The answer is yes. About $2, about $3, and you scale up from there. So a lot of it's talking people through that, and educating them on the benefits of diversification. Volatility, yes, it's volatile, but it's non-correlated volatility, so it's true diversification. And the only kind of free lunch in investing is like diversification, right? And so the logical thing to do when you're presented with a free lunch is kind of eat it. And then, yeah, to your point, like it depends, right? It depends on who you're pitching to, kind of know your audience. If I'm going to like an old gray or hair family offices, then a lot of it's kind of here's how you spell Bitcoin. Maybe not that, but like, it's here's that's the thing. But if I'm kind of selling this to my classmates at Stanford Business School, it's a whole different conversation.
So kind of following along those lines, because y'all have talked so much about being so young and starting these funds, and I think it's very daunting for a lot of individuals. And so from an experience standpoint, I want to give everyone a sense of what our backgrounds have been, where we came from before we started our funds, and what I guess difficulties we've encountered along the way with objections when you don't necessarily, at least from George's perspective and Dean's perspective, don't have that experience from a real world, quote unquote, that people look for in investment firms ultimately.
Yeah, so look. I think actually to level set, right? I think the average fund manager in the space is like 25 or something. So I can speak for myself, but I'm kind of like above average, right? In that regard. But no, you're absolutely right. I think one way to think about it is like a lot of these institutional if you're looking for institutional dollars, a lot of them will require like a 4 or 5 year track record. But the reality is no one has that 4 or 5 year track record, because back then what Bitcoin dominance was at like what 90, 100%, and you'd kind of just be buying Bitcoin. So kind of like what's the differentiator there? I think there is a little bit of an appeal though that you're kind of young blood. A lot. If you come from a traditional background where people kind of respect like the work you've done before, it's an easier sell in that regard, because you can talk about things like RR, or like how much of your return comes from alpha versus beta to these guys, and they can kind of understand that and appreciate that. But yeah, at the end of the day, it's a hard sell, because like you're young guys, and so part of it's they give you smaller dollars. Part of it's like they understand the opportunity. That goes back to education, and part of it's just like for us at least, we get advisors or partners who are older or come from more traditional finance or tech fields that we can put on our marketing materials, bring to meetings, and it's kind of a combination of like you got the young guys who know the space, running the day-to-day, but they're sort of checks and balances with the older advisors who have been on Wall Street for like 30, 40 years. So I think that's part of it.
What I'd like to address next is what's the greatest difficulty or pitfall that you've encountered with starting your crypto fund to this point, that you've had to kind of learn from or get over to mature to the point that you're at currently?
I definitely echo kind of whatever everyone said here. Sam on education being a heavy lift, and Dean on the SAF stuff. Like I've definitely had 1 or 2 SAFs like retraded on me. It's just a function of kind of unprofessional management in the space right now, and obviously the regulatory stuff as well. I think for me, I would say the one challenge that popped out in my mind is just not FOMOing into kind of doing deals. And it's kind of a combination of being a young investor in the space and having LPs who are not used to maybe who want to handhold you a little bit more because like it's a volatile space, it moves really fast, and they're like asking, "Why aren't you deploying capital? Why aren't you deploying capital? We're on a bull run." But being able to hold conviction and say that we think a correction is coming, we're the guys who have a pulse on the market because we're out there kind of getting intel and running the analysis. We should be able to just say we don't want to deploy capital at this point because we think there's room to fall, and kind of right like you might. I mean, nowadays, kind of that's pretty. We're sort of in a lower point of the market where, our benchmark might be down like 20%, but we're flat, and that's kind of 20 points of like alpha right there. So being able, I guess, to in line with educating the LPs and not kind of maintaining investment discipline when you're looking at and structuring deals is a challenge, but it's a skill that I think we should all develop.
Well, and ultimately, let's go ahead and wrap up with this because I know we're getting close to the end of our time, and kind of leave off on a positive note because I know there's a lot of things we've made people wary of. But ultimately, the piece of advice you would give to individuals who are looking to start a crypto fund, what's the one piece of advice that you would pick out for those individuals? Whether it's something that's encouraging, something to be aware of, something to be concerned about, what would that be from each of you?
I understand. It looks like people are signaling for time here, so I'll be quick. But I think the one piece of advice I would just say is just kind of take your time, right? Know what you're getting into. Take kind of the measure twice, cut once approach. Like line up the right advisors, line up kind of what your strategy is, and yeah, like you have to be in the space for the long term ultimately. And so it doesn't matter if it costs you a couple of months to do more diligence or do things right. Do things right the first time.
I think that's a very good point to leave off on. Again, we want to thank LA Token, our hosts here in San Francisco, and for everyone sticking around here late in the day. We hope everyone took away something from how to form a crypto fund, and we hope you all have a wonderful rest of your stay in San Francisco. Cheers.